Let's talk about putting it all together and the power of confluence. We are looking for key support and resistance zones to align with Fibonacci retracements, Fibonacci projections, and trend lines. When we have more than one tool lining up at the same place, it stacks the probabilities in our favor. No trade will be considered if a key support or resistance zone from the daily or 4-hour chart is not present. All confluence levels are found on the daily and 4-hour charts. Please read that again. All confluence levels are found on the daily and 4-hour charts, not a 5 or 15-minute chart. The main players in this industry are trading off a big time frame. Your daily, weekly, monthly, 4-hour chart, not a 5-minute chart. Please be very careful about trying to trade smaller time frames like 5-minute charts without taking note of the bigger picture. So let's have a look at a little exercise I've put together. Identify key confluence levels on your daily and 4-hour chart using the above tools. What you're going to do is highlight the areas on your chart and then journal each reaction price has from those levels. Take notes of the maximum drawdown as well as the maximum reaction from the level before price comes back to the level. This will build confidence in your analysis. The more you do it, the better you will become. Finding high probability trading levels, combining Fibonacci retracements with key support and resistance zones. In this example, we're going to use an upswing or an uptrend. Here again, please note we're looking at a daily or 4-hour chart, and importantly, we're looking at the lowest low and the highest high when drawing Fibonacci levels. Very important. We're not looking at small levels or small swings. We're looking at the major swings on the daily and 4-hour chart. So first things first, let's identify the swing, lowest low, highest high. These are our major swing points as discussed in the first section on cycles. We draw a Fibonacci from the low to the high, and you can see the retracement 38, 50, 62, 70.7, 79, 886 and the 100%. We then add in our trend lines, so we find 2 swing lows or highs. If we've got channels, we can draw those in as well, and we extend the line out. We then note key resistance zones. So as you can see on the left hand side, we've got key resistance noted by this red arrow. We then have a key support zone right here. You can see price came back, held support and then rallied. That's noted by the green arrow. If we now run a horizontal line between the resistance and the support, you can see we have a price flip where resistance broke through, became support. What else do we have? Well, if we look closely, we have confluence of a 38% retracement with a horizontal support and resistance level. Here's your 38 and your support zone. We also have a key resistance zone across here. So if we mark that off with a horizontal area, here again, note these are zones. Okay, that's why I've got 2 lines and not 1 line. You can see we have confluence with the 50% fib retracement, the key support zone, and the upsloping trend line. Where else do we potentially have a level that we may be interested in? Well, if we look down towards the lows, we have a resistance zone and a support zone. What does that line up with? Well, if we put a horizontal line across there, you can see we have a nice price flip, 70.7 with a key support zone. So these are all levels that we could be interested in placing a trade. What we're looking for now are bullish reversal patterns on a smaller time frame at these levels. So please note that we're not looking for patterns on the smaller time frames and then seeing if there's a level around us. We're looking for levels on the daily or 4-hour chart, and then we're looking for patterns on the smaller time frame. You can see price comes down, it breaks through the 38% level. So although this was good confluence, there were no buyers available. Okay, now there may have been a smaller time frame pattern on a 5 or 15 minute chart that failed. We wouldn't know looking at a larger time frame like this. That's why we use the top down approach. Price then comes down to a next level, and it's at this area right here that we're looking to find a bullish reversal pattern on the smaller time frames. Price rallies into a potential area of resistance. Look at this level right here. We have a key resistance zone, becomes support, and it's at this level here we could possibly find a bearish pattern. So if we draw our fibs from this swing high down to this low, we may have confluence with this area of horizontal support resistance. Now I haven't put the fib level in there because it may look a little bit on the messy side, but you can see I've noted it as a key resistance zone. In this instance, price drives deeper, takes out the 62, and then goes into the 70.7 level. Here again, we've marked these levels off beforehand. These are not levels that we mark off as price is reaching them. Okay, so we can be relaxed and prepared. We can even set alarms or have a text sent to your cell phone or your mobile, and you can get ready to place potential trades or look for potential trade opportunities around these levels. And you can see we get a nice reaction off that area. Once again, we're looking for patterns at these levels. We're not just clicking buy, buy, buy. Okay, you can do that, but that's not the way I want to teach it. We're going to look for patterns to confirm that these areas are likely to hold and give us a very high probability trading opportunity on the smaller time frame. And here again, you can see I've noted this area right here as potential resistance. So once again, resistance becomes support. We get a bounce. Now, even this small bounce on an intraday chart or as a day trade could be a few hundred pips. So that's why I say the higher the time frame, the more power it has, as the larger institutions are paying close attention to these levels. I hope you found that very helpful. In our next section, section 3, we're going to be looking at the different patterns that we look to identify at these different trading levels. So I suggest you review this on how we find the levels. We've discussed the price swings, we've discussed the Fibonacci retracements and the Fibonacci rejections with the trend lines. Now we've added them all together, and this is what we do on a daily basis to find high probability reversal levels. And all we have to do is now wait for a smaller time frame pattern to set up at this key area where we can place a high probability trade.